Hello, guys. Can you hear me? Just wave. Can I be heard? I'm using my microphone. Can you?
Yes, yes.
No. Something wrong, huh? Okay. All right. All right. Let's start. Okay. So you are watching today's episode. Today is Friday class. It's free. So I'm here to discuss bears rejoicing over a 5% drop. Bulls are partying like 1999. We're hitting Nasdaq 10,000 and our rooting for humanity stock picks. June 12, 2020. This is Nikki. I am a chartered market technician. I also am in Twitter at Faces Trader. Our website is awesome10x.com, YouTube awesome10x. Now, I give live assisted trading guidance for the Philippines and US stock markets. We host Zoom live classes every Monday to Friday, 5:30 to 6:30 p.m. Today, you're watching a free class. Every Friday is free class. Membership fee, $40 a month, $200 for 6 months. Free classes every day, every Friday. Contact Rachel in this Viber group for details or go to the website to log in. So this is today's quote, Bill Gates. We always overestimate the change that will occur in the next 2 years, and we underestimate the change that will occur in the next 10. Don't let yourself be lulled into inaction. Similarly, people are hyperventilating over this crash, 1 day crash, 2 days crash, or 1 month. Do not forget the big forest for the little trees. Dow Jones is down 6.9%, S&P 500, Nasdaq is down 5%. The small caps are down 7%. June 11th, Nasdaq. This is the 110,000 journey. Nasdaq started 69, went as high as 10,000. You could see that it had a strong bull drop here when it rallied from about less than 100 to about, even during 1995, a quick move to about 5,000. So it feels like 1999, makes an 80% drop. This was about 800 bucks, went to 2,000, 2008 subprime crisis at 1,000. The infrastructure is there, and lo and behold, boom, 1,000 to 10,000 uninterrupted. The largest correction would be this 2018 recession yield curve of about 25%. The COVID crisis took your Nasdaq down 30%. So, of course, you could see this cartoon, and I think that's apt. Nasdaq 10,000 is brought about by your fangmans. Your greatest of all time would, of course, be Amazon, $1 to 2,600. But Apple, Facebook, Amazon, Apple, Facebook, Microsoft, Nvidia, Google, AMD. Yeah, so your fangman troops. Of course, their coach is Mr. Jerome Powell right now, but it's always been the Fed. Now, you have to understand that you always have to buy great businesses, not great valuations. Always buy excellence, no matter the cost. Sell mediocrity. This is an art. This is a quote from Jerry Garcia that you have to understand when you're investing or when you're trading. You do not merely want to be considered the best of the best. You want to be considered the only one who does what you do. That is a statement echoed by guys like Peter Thiel in his book Zero to One. He said that you have to buy companies that were monopolies, the only one that people can remember when it comes to search engine, when it comes to cars, when it comes to social media platforms, and so forth. It is the only one because most of these markets are winner takes most. If not winner take all, it winner take most. High quality will never get old. This is a 2019 snapshot. Amazon Web Services has 33% market share, still growing. The cloud infrastructure continues to grow 50 to 100% year on year. Microsoft is already now 20% market share. They went from about $1 billion to $50 billion revenue in about 7 years. So you could see the cloud business is growing. The cloud infrastructure takes all the competition. Amazon, Microsoft, of course, makes them all worried, but it's been good for all the groups: Amazon, Microsoft, Google, IBM, Alibaba, Salesforce, Oracle, Tencent. Alibaba wants to take a lot of market share in China and be a global top 10. So the tenets for great companies for long-term investing is total addressable market, serving a quick metric of the underlying potential of a given opportunity. TAM, total addressable market or serviceable market. Another criteria when you're choosing companies is, of course, the Thanos criteria. The Avengers movie said that if Thanos snapped his fingers and that company suddenly went extinct, would you even notice? That is a criteria that our great Motley Fool partner, well, not partner, but Motley Fool Brothers, a very strong service in US made by the Tom and David Gardner brothers. I usually listen to them, and I think it's a great, great podcast. They have Rule Breaker Investing and Spotify. They mentioned the SNAP test. I consider it, of course, the Thanos test. If you will get worried if that company went extinct, then it is a company that you have to think about. Of course, Adventures in Financial Independence, shout out to them. I love their Twitter account. Take a look at the high growth compounders. They will always look overvalued over a long time. Value investors will tend to shun them out for that reason. But if you look at the long term perspective, stay the course if you own them. Take note that year 2004, Facebook was less than $1 billion to end even at 2011, 7 years after, from 1 billion to 60 billion. Right now, market cap valuation of Facebook 2020 is $680 billion. Yes, it's a 100x move, although for publicly listed companies, Facebook got listed about 2014, 2012. You could only have bought, even if you were the smartest person who have bought at the lows, you'd have bought somewhere at about I think you'd have 20x your money. So about, I think it was about from 100 billion, it went to 50 billion. So it's 14x. So 50 billion to about 680 billion, 50 to 700 is 14x. Of course, Puru Saxena, if you haven't been watching, or I mean, not watching, if you haven't been following him on Twitter, you're really missing out. Shout out to these great investors who are teaching us the knowledge of and wisdom. In the last 13 years, he shared that all these great companies, Salesforce.com, the grandfather of SaaS names, software as a service names, Amazon, Netflix, Alphabet, MasterCard, take a look at those gains. 10,730%. This is as of June 11, 2020. 10,730%, 7,500%, 6,700%, 2,000%, 586%. Sorry, is this 700%? That means that investing long term in the last 13 years for these names would have made you richer and happier. So all prior pullbacks now look like mere blips, and all of these stocks were always overvalued. Never ever think that a great company will always be cheap. Always buy great businesses, not great valuations. Of course, over that span of time, let's take a look. 20-year charts of your value names. Your value names such as CVS Health, Coca-Cola, Johnson& Johnson, ExxonMobil, ConocoPhillips, L Brands, Walmart, Pfizer's, Kellogg's, General Mills. Not to demean them, but it went from about negative 17% to 250%. Obviously, these stocks were always considered undervalued, cheap as hell, always dividends, dividends, dividends. Well, take a look. Even in the last 7 years, the value was never outperforming growth. Never. So I want all the bears tonight to reflect on the chart of the Nasdaq, the 100 to 10,000 journey. That's a 100x move. If you can tell me that it is not going to go 100,000 in the next decade or 2 decades, tell me if technology as a sector, XLK, will collapse anytime soon. As far as I know, XLK is the best sector and will not collapse anytime soon, and I want the bears to reflect. Of course, I'm a big fan of the Gardner brothers of Motley Fool. I shared this on my Twitter at Faces Trader, Tom Gardner's great business checklist. Ask yourself when you're doing your investing, Will you be okay if the CEO were babysitting your kids? Do you find them trustworthy? Would the CEO demonstrate passion? Has he pursued mastery in the field over the long term, say the last 10 years? Does the CEO have the long term vision? Is he invested in the company both financially and emotionally? That is a good checklist for you to ask yourself when you're going to do a 10-year thinking format. Now, always think about the potential. I share that when I read these questions, I keep thinking to myself, Roku, Nvidia, Zoom Video, Tencent, Netflix, Spotify. Does this company have ample opportunity to continue to grow from here? Is it in an early-ish stage in a mature cycle? Are the company's products at an early-ish stage in a mature cycle? Is the growth accelerating? Is the company growing its share of the market? Does the business have an alternative business avenue to pursue? Does it have optionality? As you could see, Amazon went different options, different business avenues from e-commerce to cloud to everything, right? So can this business model scale up without expensive reinvestment? You look at Facebook today, you think it's digital advertising, then it has payments, then it has e-commerce fronts. What else is there for him to take over? Have I spent considerable time examining the growth opportunities that this company has in front of it? Does the company have purpose? Are the customers thrilled? Have you seen or tried to debate with the Tesla evangelist? I think when it comes to evangelists, the most ardent fans club is Tesla, Beyond Meat, Square, Shopify, Amazon. To a certain extent, indirectly, also to Roku, Tencent because of the Fortnite evangelists, Nintendo due to the Animal Crossing evangelists. Does the company fulfill a real customer need? Are the customers delighted with the products? Are customers' lives improved for having purchased the company's products? And if the company discontinued operations tomorrow, would anyone actually be bothered or will they notice? How about a day? How about a month from now? Too many ifs, but the adage and the port snap indicator still works. June 6, 2020, I said that, there's this common adage. If they say, buy when there's blood in the streets, I said, should I start shorting? Because the bears were viciously murdered June 6, 2020. I was just stating the obvious. And if these bears were, I was thinking, hey, the bears, are they extinct? Should they be extinct? It was a caution on my part. And so I was saying around those times, and also I tweeted and retweeted the people that I believe are good people that you should follow. Again, I said that success is talent and luck. Great success is just a little more talent, but an enormous amount of luck. Do not ever confuse your great success with great innate talent. Puro Saxena made a caution of note June about 8. We were sharing as well, note of caution, my year-to-date return is not normal, neither is it sustainable. Making 100% in a portfolio in 5 months is not normal. Perfectly put, never underestimate the role of luck in the outlier generous returns, because even if you think your great success is a result of your talent, you will end up giving up those gains. Of course, pattern profits I like to share because I love these guys. I follow them. June 7, 2020, they have been cautioning each other. We have been cautioning each other, of course. Markets move in cycles. These cycles repeat. It's not a time to be complacent, nor a time to be fearful. It is just a good time to be prepared. We always talk that predicting rain does not count, building an ark does. Have you built your Noah's Ark of cash such that if it rained down and made of falling knives and all of those drops, are you prepared? Insanity charts. I will discuss stocks that make so much range potential, offering gains both for bulls and the bears. When are your next big short setups? Of course, big explosions to the downside equals insane collapses, which will encourage scalpers, traders, day traders to go long. Fast money on extreme moves have to be locked fast because crazy times lead to crazy gains. You got to be fast. Volatilities expand and explode. Let me tell you a few things. I am sharing June 12. This is an article that I actually wrote June 7 evening. It was to be published June 8. It wasn't published as they were trying to fix my article, proofreading stuff. But I'll read to you the most important things in my article. Add routines to your investment and trading processes. My advice on how to handle a Nasdaq 10,000, a frothy market, is number one, balance FOMO and JOMO with CISO. What's FOMO? Fear of missing out. Everybody knows fear of missing out. When you miss out on Zoom's 200% rise in 2 months, let alone a 50 to 100% rise in the airlines in a few days or weeks, you probably feel like crap for selling early, right? Even if you may have made 100% in a short time. The only way to eliminate FOMO is to learn JOMO, the joy of missing out. Because you know that another good trading setup or investing in another great company is going to come your way. Trades are truly like buses. It's like business opportunities. They just come one time at a time. They come in droves. Similarly, you also now have to know CISO, scale in, scale out. Ultimately, you have to realize that there's an element of luck in making these insane moves. For instance, would I have known personally buying a company that's supposed to go delisted for accounting fraud like Luckin would go 300% the next 3 days? I followed my plan, scaled in, scaled out using technical resistance, placed my trade like anyone would, a position of 5% portfolio account. When you focus on your process, you frankly would just open up your heart and mind to whatever outcome, even the point of losses. However, it actually became a 300% gain. As I said, scaling in and scaling out is a systematic admission of being cognizant that technicals are not enough, neither fundamentals. Even if your fundamental judgment would be that airlines should not go up 100%, it did happen. It is not how you design selling upwards or buying downwards. It is how you scale in, ladder into positions, 5%, 10%, 15% size of your portfolio when you're buying on the way down and when you're selling on the way up. So generally speaking, I said June 6th, I said I would scale out partially because frankly, nobody really knows these days. I mean, the sellers, I was selling thinking I'm dumb for selling early. The buyers think they're smart for holding. We would never know, would we? Some of my selling cost me an additional 30 to 50% higher. However, scaling out is part of not calling tops. What was I doing? Selling June 6, June 8, June 9, June 10, accelerate the selling June 11. I also loaded up another name. So do I want to be 100% cash? Nope. Sold near the top, but I also bought March 10, March 19, March 20, March 23, March 27, even at April, even at June, I was still buying, but it depends what names I'm buying. Did I buy the bottom? Did I sell the top? To me, selling near the top, selling near the top, buying near the bottom is enough. You do not need to buy the bottom nor sell the top to make money in the market. Also, when the bears rejoice today, tonight, take a look. 10-cent chart. The bears can rejoice with a 3% victory lap. But even for the last short-term month, okay, what happened? March, 316 to 450. We're even going to go all-time highs here for 10 cent. Victory lap of a negative 3%, just give the bulls their moment if they want to, if they want to share that they're so rich or they're so, I thought, I told you so moment, give them that. But there's a million reasons to be a bull on Tencent. Your panicking is meaningless. Tencent is a video gaming giant who also owns Epic Games, which owns Fortnite, Tim Sweeney's company. Of course, they also own Riot Games, which owns League of Legends, also owns Activision. A little bit of, they have the distribution rights. And then for PUBG, COD Mobile, and many more. Of course, WeChat, QQ, all the 800 startups in China. Okay, so last night, oh my God, it's all red, 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 red. So people are saying, hyperventilating, crash, crash, crash. All the bears said, I told you so, I told you so, I told you so. Let's take a look at the biggest drop last night for Ballard. It was negative 17%, high of 1362, close at $12, June 11. So for those who don't know Ballard Power Systems, a Canadian company, 2013 went from about 50 cents to about $8. $8 goes down 87%. Hype dump. When the earnings were coming in, okay, about $1 goes to about $5, another 56% drop. So far, from about $3, after breaking this $4, it went all the way to about 14. That's a big move, but even just this month, going from about 7 to 13. Now, take note that $7 is actually your all-time high before, which is now your support. So at 7, we actually wrote an article about this name. So Ballard is a fuel cell technology leader. So how do I interpret something like this? I would put a buy here at about 11. Dips would have to be bought. 11 or 9, which should be a still good entry opportunity. Resistance at about 13, back to about 17. Take note, these is a 20-year resistance. Take a look at the smaller charts daily for Ballard Power. You could see that on March from about, there was a lot of move for Ballard Power as they got their joint venture contracts. Buses in China are all using fuel cells with Ballard Power Systems. They have cash, they have contracts. So even with the COVID pandemic, the $13 to drop to 7, this is a V-shaped reversal because it was, the contracts were solid and they were doing fuel cell technology where a lot of Chinese companies wanted to enable for the electric bus future, or in this case hydrogen fuel cells. So it's not just in China. They also have contracts with France, with a lot of railroad trucks going fuel cell. So if you want to read more about Ballard, you could check it on my Spotify podcast. I I have like specific company picks, and Ballard is the name that I like. But from a chart perspective, chart wise, you've got support here at about 11. This $12 drop, any re-entries here at about 11, take a look and make an entry tonight if Ballard will fall 11. Put it on your watch list, buy Ballard 11. Now, of course, we discussed historical corrections and pullbacks of your super life-changing 100 baggers. Mercado Libre, when you're early, you would see 90% drop, 50% drop. Right now, because people are already aware how wonderful Mercado Libre is, these names don't sell cheap. Premium, great valuations happen to great companies, and that's fine. Are you worried that 860 would go to 700? Probably not. If it drops to 700, you should be happy. However, with FANGs at all-time highs, it's gonna be very difficult to get Melly down below 700. If you missed that drop at 439 this week, this last 3 months during March, I'm sorry, but you won't have any entries at about 400 to 500. The best thing that you should hope for is a probability to get an entry somewhere at about $700. These corrections, the mildest would be it's pretty mild, but the fiercest would be 30 to 40%. So 900 minus 300 is about 600. If you can enter 600 to 700, pray that you can get, but I'm telling you, the probability is very, very low. Those who are panicking, let them panic. Of course, Amazon, we just have to tell you that early life stage startups always experience 97% drop, 54% drop, 67% drop, because they are at that point in time speculative concept stocks. Nobody would believe in e-commerce when nobody can even log in on their computer during that time. Of course, when you see the next 20 years, Amazon, of course, goes from about $1 to 2,600 all-time highs. This chart was as of June 8, 2020. As of June 11, I think Amazon is still trading at all-time highs. Any drops at about 2,000 to 1 is your entry opportunity. I am sorry for those who missed out, but these names don't go cheap. C Limited, of course, has traded to as high as 90, started about 2018. C Limited, of course, is the owner of Shopee and Garena Free Fire. These are long-term winners. It used to be that e-commerce names would fall 80%. C Limited only dropped 40%, 30%, 30%. The market is wiser as time goes by. Any drops of C Limited, 30% drops would be given a lot of buyers. Your hope is 60 to 70. Square, of course, hasn't gave an entry at about 37. I saw a lot of great people buying in. That was a 10 to 100 move. That was a 10x move in about 3-5 years. Made a huge correction. Very rare, but every time a bagger, a secular long-term winner gives you 50 to 60%, never ever close your eyes. It doesn't matter if you ladder into your positions, if you're entering square at 76 or 80 or 70, 60 or 50. Really, these are long-term winners for you to take a look at. Roku, of course, from about 18 to 180. It's giving you an entry at about 100 to 110. Fell to about 60 this year. That's about 100% higher right now. I don't think you'd get it. I will not think that you can get it at 60, given that Roku has about 40% market share in US with a huge 80% margin on their service revenue platform because of over-the-top advertising. Those interested for secular trends, connected TV should have Roku at about 100 to 104 or even 110, doesn't matter. You look at the long term, that's where the biggest gains come from. Netflix, people are still imagining they are still trying to think that they could get Netflix at about 400 below. Netflix went from about $1 to about $400. The reality is it was about 27 cents to $450. So even the thing about you that you should know is that even if you're entering at about 2013 when Netflix went original, 40 to 450 was still a 10x move in the last 7 years. Will Netflix give you another 100% in the next 5 to 10 years? It's all about India now. India has 1.4 billion population. Netflix hasn't scratched the surface. Just 1% market share in India since they started 2016, from 0 to 14 million subscribers. Maybe it gets to 100 million subscribers in the next 5 years. And you know that when it gets those 100 million additional subscribers, Netflix has all the way going up. Dips are to be bought. Of course, during 2003, 2004, nobody understood Netflix business. Understand that innovation is always going to lead you to 70% drops, except the people who are knowledgeable on these tiny tribes. Now, value is about price and probability. You've probably heard everyone say Zoom video is expensive, Datadog is expensive. These SaaS names are trading at about 40, 30 times price to sales. That is rare. The thing is, there is tremendous value in high revenue growth, free cash flow margin businesses, especially for critical infrastructure. Even if jobless doubled or quintupled or whatever, quadrupled, if this business has very low impact, this is the reason why they are expensive and they will remain so. You should ignore the bears on SaaS names. Datadog fell at about last night to about 76, still like 5% away from all-time highs. Any drops of Datadog from about 60 to 70 put a lot of buy lists for Datadog. Zoom video never fell. Actually, I still FOMO'd at about 205. Last night, the street traded at about 222. Still just about 3 to 4% from all-time highs. The biggest payoffs, of course, come from where nobody wants to bet. Those are secular trends. But how about the unlikeliest outcome? We thank you, Mr. Nassim Taleb, for his excellent Black Swan strategy. He said that you want to keep most of your money in ultra safe bets. Right now, the ultra safe bets are, of course, your technology, but bet a small portion on speculative bets that will soar during a market panic. He was a guy who actually made money during the 2008 crisis. It's really about having that 10% rule. You have to think about what's the risk reward ratio if I lose this 10%. He put an option, maybe a $5 million bet or a 10 million, because it depends really on his fund. So like 10% of his fund will bet on the unlikeliest outcome, because if that unlikeliest outcome were to come true, he'll get a 10x move, he'll get a 100x move. Now, who did that? Okay, let's talk about a few things about these black swan bets. Remember year 2008? What were the toxic assets? So this witch tales, double, double, toil and trouble, fire burn and cauldron bubble. Tim Geithner, he said, who will eat this by the shovel? Of course, taxpayers. Obama and Tim Geithner, stand back, Tim. I don't want you to get hurt by the stampede. There's a lot of toxic assets in the warehouse. Who's going to buy these names? Okay, of course, we know it's taxpayers all the time. So the hedge fund billionaire Bill Ackman turned a $27 million in a $2.6 billion windfall as he made a bet that the coronavirus outbreak would drag stocks downward. He made a bet February, March time, it fell all the way, sinkhole. Billionaire investor uses $27 million. That is a complete black swan event trade that he makes money from. Always remember, if it's just 1% of your portfolio, but you could make 100% gain, why not? If you think about it, Citigroup financial assets were the most toxic asset in the planet year 2008, 560 all the way down 99% to about $10. Fast forward 10 years after, what happened to your financials? Nothing. What this means is that bad stocks will remain bad forever and ever, 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 ever. Next 10 years, it's still going to be forever, ever, 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 ever bad. But for bad names, could it even make money? Yes. Once it fell to about $10, it rose $50 to $60. People saying that it's insane to bet on these names don't know history. Let history be your guide. Whenever it's 99% down, there will always be these gamblers. There will be these gamblers who would buy and think that this is a lottery ticket. I'm going to gamble my way. I'm going to put my $10 or $20 and make 100%. And it always happens. Citigroup this year, what happened to financials? 32 rises to about $60, 100% gain. Of course, it's going to go fall down again. Are there going to be people's bet here at about 44? Probably there will still be those buyers. Fannie Mae down 99% from about $90 to $1 to $2. This is 2008 crisis. What happened? Okay, this was a chart. Once it fell there, there were spikes. Those are short covering rallies. Spike, drop, spike, drop. Da 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 da. Nothing, zombie, boom. So there are always people who would make these types of money. 25 cents goes $5. That's a 20x move. So people are now laughing at the outsized risk reward opportunities, but it comes where nobody is really betting. And the risk reward is like 1 to 10, 1 to 20 when you're very early and when you know how to leave. Leave when the market is crazy because there are always opportunities. There will always be parabolic pops, drops, ups. Why? Because there's an element of surprise. Like, why the hell everybody tried to make a bet there and everybody lost money? Now you're like making 100, 200, 500%. UVXY was a big bet, of course. The February one when a COVID global pandemic was starting from about $10 boom, 10. Of course, when it fell, you knew that you had to buy on super fear. Maybe you were buying somewhere here. It even fell all the way down, but you scale on your positions. You buy here, I'm sorry, what you mean is I'm buying stocks when your UVXY is going parabolic because you know that that parabolic is not sustainable, especially when it goes down like that. That's extreme fear. That is the time to buy stocks. UVXY is a volatility indicator. The higher it is, the more it means that it's extreme fear. The lower it is, it means that it's extreme complacency. Now, right now we're in the insanity zone. Take a look. Everything, all the bottoms you could see in your UVXY, buy on super fear, buy stocks on super fear, buy stocks on super fear, buy stocks on super fear. This was the time that you had to be cautious. Start of the Robinhood insanity. There were portfolio snapshots of 100 to 200% in a day. You got to get scared. You want to get selling some of those positions, even if it could go all the way to a complacent insanity world of about 10 for UVXY. It was too scary to be betting aggressively. You were saying that the bulls have to be careful, and so we were trimming, scaling out. But had they been cocky, however, when will the Bears celebrate? Would it be at 50? Will it be at 60? Will it be at 70? Will we go to 120? So right now, we're still waiting for this fear index to go parabolic. But as you could see, those who made a bet on the bearish side definitely made some money. You could make money on the downside and the upside. There's always money to be made. Nikola Tesla, it's always just trying to ride on the hype of Elon Musk. Of course, this went from about $10 to $90. Past few days, kaboom, $60. We know the tail end of this story goes down all the way. That's what's happened to many speculative names. So the ending is really, really wonderful to the downside. Any rises about 70 to 80, of course, there will be people who will short this name. DraftKings, okay, a lot of people trying to buy what they know, except when it's $26 billion market cap in this level, and you've got the bears now shouting that this is an insane valuation. Will it go 50% down? We'll see. But when you're trying to make a bet, enter early, leave late. and know how to leave. Hertz Global, you know what's happened here from about 50 cents to $3.50. It's just the same as Fannie Mae and Freddie Mac and Citigroup during that time, right? Practically nonsense companies from about down rising 15x, then down, I don't know if it's going to go down 93%, but of course, like, these names are nothing. Those are just lottery bets, so it could go down to zero. Look and Coffee, of course, a fraud. What happens? We know it's the ending of the story. The first thing that you have to know is that it went from 150 to 3, from about $26 fell to about 6, went down all the way to 150. So that's 2 times 80% drop. You don't bet on this because you don't know if 150 was the low. It could have gotten to $1, but you bet on the higher low. Once it had this higher low at about $2, 220, you could make a bet, take a cut loss here, or even but it's all about, really, it could always gap down on the 50% or 70% the next day. So these bets, you only do like 3% of your portfolio. Think about the black swan event trade that Nassim Taleb talks about. It's about betting on the unlikeliest outcome. In this case, the unlikeliest outcome was that Luck and Coffee was not going to get delisted, even when everyone was saying that it's going to get delisted and go down to zero. The short squeeze, of course, went to 6. Of course, it's a very predictable sell-off here, predictable sell-off here. The question now is, will it get bought again at $2 or $1.50 sa susunod na kabanata? The next thing. Now, you know that the government was going to bail out the airlines. You already knew this because everyone was, they were telegraphing this. The $6 trillion Fed stimulus bill included the airlines, and all these, they included the airlines. So what will you do knowing that they have bailed out the banks the last time? Will you fight the Fed again? Of course, you're klutz if you're going to fight the Fed. It's like poker. Poker hand. You got a pocket rockets, and you know that the government was with you. You don't want to be betting on the other side. You want to go where the Fed is. And at that point in time, there was an easy buy here at about 21 for United Airlines. What was easy was to buy at 21 because your risk was $3. What was difficult to know was you didn't know that it's going to go for 49. You might have assumed that the resistance was 32. That was just the previous resistance here. But betting when you're early, selling when you're late, it's again black swan event type of thinking, black swan event type of trading. You gotta know what you have. If you have a pocket rocket, also why was there this gap up? Because that time, May 18, we got the Moderna vaccine. That was a reason for the reopening. So Moderna vaccine here, the tourism board here. You've got all the, it's like was giving you all the right information. So all the shorts had to cover. That's what happened with American Airlines, with Save Spirit Airlines, Carnival, Norwegian. Momentum accelerates upside and downside. It feeds on itself. Definitely momentum was going up. So upside, momentum goes down. Downside, after 123% down, 34% drop. Will it go down back to 24, 21? Tonight, we have yet to see that. We're going to check. But as you could see, bottom here. First bottom, second bottom, triple bottom, quadruple bottom. Will it happen again? We'll see. One, two, three. Season crew, 1, 2, 3. Same pattern. Now, Michael Burry, of course, we like Michael Burry, Big Short. He added these 5 new stocks to his portfolio in the first quarter. A lot of people are trying to, these guys, the Robinhood guys, are stupid. Well, what about if I told you that not only them were going wrong about the reopening? Your Michael Burry, which is, of course, the guy who made the call to Big Short, which became a movie, made money on the subprime crisis. He is actually, lo and behold, buying Boeing. Boeing Airlines went from about 90, second higher low here at about 120. Boom, went to 240. You think people will buy back here at the 147? Possible. These are your black swan event type of trades. Michael Burry, of course, had added 5 new stocks. Scion Asset Management has $387 million. And he actually has GameStop. This is a value play for him. He bought it about $3. I think right now it's about $5 to $6, nearly 18% of Scion's portfolio. Amid the coronavirus pandemic, he added some new large cap stakes into his portfolio, including Boeing, which sold off more than 50% the first quarter. Back in March, Michael Burry also made a significant bearish bet that was paying off amid the market sell-off. So you can make money on the downside, but you can also make money on the upside. Michael Burry knows how to play both sides well. These are one of the names that he got. He bought some restaurants, Jack in the Box. He bought technology, Facebook. He got an airline, Boeing. He got the best and the worst. Michael's Companies is actually in your reopening theme. Michael's Companies is a retailer. He bought Discovery Channel. Those are like a few companies that he disclosed, that he shared, that he was buying. He also disclosed buying casinos like Las Vegas Sands, MGM. Most of the names that he got was about 100% up since March. Now, this is my rooting for humanity stock picks. Do you think that the Filipinos, the world, the Americans, everyone, like all of them, are you gonna root for humanity, or are you gonna root for destruction? The most dangerous creation of society is the man who has nothing to lose. It's all about risk reward. There are stocks to own for the short run, but there are also stocks to own for the long run. Now, of course, take a look. This is your restaurant sector. Year to date, you've got Beyond Meat rising from the ashes from about $60 to $160. I think personally, 160 market cap is quite expensive, but if it goes $100, I would. The reasons, because there's that big fan base, there's that huge total addressable market potential. Even if there's like a lot of even if there's a lot of competitors in the plant meat industry, namely Impossible Foods, Kellogg's, Conagra, Nestle, you gotta give it to them for for having those partnerships with Starbucks, Dunkin' Brands, QSR, and so forth. Of course, you could see that Domino's Pizza and Papa John's did pretty well year to date. If you got in when they were low, you've got about 100% move minimum in the last 3 months. Same as for Chipotle. But as you could see, has the restaurant sector year to date gone way up? The question is, has it gone from lows to highs, or is it insane? We will go to the charts of them, but you could see that it's not all the same. Not all restaurant sector actually rallied hard. Some of them are still nursing year-to-date losses. So you could see the like Shake Shack restaurant brands haven't really gone up. And if they fall bigger this couple of months, then you might want to check it out. Same as for Starbucks. Of course, there are Philippine companies that are still big drops. Jollibee Foods, Tyson Foods, Shakey's Pizza. Those are like Philippine names. Luckin Coffee, of course, is a 99% down company. If you're gonna make those, it's a fraud, right? So, but they've got 4,500 stores. Change the management, get the liquidation move, find somebody to buy out those firm. You might get those black swan event types of bets. So rooting for humanity, Starbucks, of course, there is that boycott on Starbucks right now. Use that bad news to actually get low. The coffee giant is now getting slammed for telling the workers not to wear the Black Lives Matter gear. So a lot of people tweeting that if Starbucks is saying Black Lives Matter attire is prohibited, then you make sure that your name is Black Lives Matter so that every cup has it. 8% down last night, rallied from about 50 to 84. The question in Starbucks is that are they gonna grow their sales? Yes, give it some time, 6 months, 12 months from now. Use those drops here at about 65. Put it on your watch list. Wanna buy Starbucks? This is a company that went from 27 cents to $100, present in 190 countries. They've got more than 80,000 locations. They have a strong direct-to-consumer app. Of course, the Starbucks Loyalty Awards. Starbucks is opening about 4,000 locations in China in the next 5 years. I think they already have about 3,000 or 2,000. My number could be wrong, but it's to me, Starbucks is a Chinese move. So the Chinese growth there, as the consumption upgrade of China goes global, you have to understand that China's consumption went 20x in the last 20 years. Sorry, it went 40x from about $200 to 8,800 GDP per capita. Even if that GDP per capita were to fall 20% or 50% down the road due to the COVID crisis, that's still 10x 10x from their GDP per capita 20 years ago. So we're talking about 800 million people who are not poor anymore, who can afford a $5 cup of coffee. Okay. Of course, Disneyland theme parks, you can't go social distancing if you are going to theme parks. Reopening, it actually went from about 105 to 125, fell down 7% last night. Take a look at the 105 and 95. You want to enter these Rooting for Humanity stock picks. Disney theme parks is right now, of course, 70 to 80% of their revenues are all dependent on these recreational parks. And so they're gonna get badly hit. But we're talking about a company with great brands, the best, the most, the largest entertainment company in the world. So maybe I don't need to discuss why you have to buy Disney. Just use the charts: 95 to 105, near 100. $100 below, take your opportunity to enter this very great company long term. Okay, plants versus animals. Right now, actually, one of the reasons why plant meat companies like Beyond Meat are doing so well is because Tyson Foods processing plants had to close down during the COVID crisis. Also, they had this chicken price fixing probe. There's this swine flu. So like it's bad news one day, one after the other, the other. So therefore, like people always forget the reality that Tyson Foods continues to be it operates in the food industry. The company is the world's second largest processor, marketer of chicken, beef, pork after JBS SA, annually exports the largest percent of beef out of the United States. The world is 99% beef eating people, not one and only 1% vegan. So there's a large percentage out there. Plus, let me tell you that Tyson Foods has their plant meat brand, which is raised and rooted. Together with subsidiaries, Tyson operates major food brands: Jimmy Dean, Hillshire Farm, Ballpark, Right Brand, Idol, State Fair. Tyson ranks number 80 in your Fortune 500 list based on the total revenue of the largest United States corporations. Oops. Let's go to the charts. Okay, Tyson Foods. Right now, there's a symmetrical triangle here. Made a breakout. The probe, the price fixing probe by Department of Justice, and the overall market sentiment, making it fall down. We've got support here at about 55. The lows last March was about 44. We think this can go to about 70 to 84 in the next couple of months. So this is a reopening Rooting for Humanity pick. Okay, brick and mortar retailers, taking a look at Macy's, Nordstrom, and Capri Holdings. These three names, in my view, have the following. Of course, last night, shares of several apparel and accessory retailer closed lower on Thursday due to the increase in COVID-19 cases. Capri Holdings, the owner of Michael Kors and luxury brands, closed at $16, down 15% from yesterday's closing price. Designer brands closed $6.70, 15% down. Kohl's department store down 11%, Macy's down 15%, Nordstrom down 12%, Ralph Lauren down 8%, Urban Outfitters down 6%. Now, of course, those drops might look very huge, like down 15, down 11, down 12, down, down. But if you look at the month, okay, just 1 month, Foot Locker is up 40%. The S&P ETF is just up 10%. Capri Holdings is up 60%. Chico's is up 85%. The Michaels companies is up 111%. So the point is, retailers are actually just profit taking. Why? Why do I like these three names? They have healthy cash situation. They have the ability to withstand store closures amid the COVID pandemic. Plus, they have e-commerce sales. None of the companies that I talked about, Macy's, Nordstrom, or Capri Holdings, are in acute danger of bankruptcy. They're not going to be bankrupt anytime soon. They're not the same as JCPenney or Neiman Marcus that went bankruptcy filing. All of these have been battered since the COVID pandemic, forcing most retailers to close down their physical stores. Capri Holdings, the owner of Michael Kors, Versace, luxury brands, saw the credit rating get cut to junk levels on April 2 on concerns about a possible recession that would last until next year. Nordstrom's credit rating was also cut in early April, not quite to junk levels yet, after the company raised $600 million via bond offering, cutting $500 million from its capex plan to bolster its balance sheet. Take a look at Nordstrom. Nordstrom fell down from about 2014 levels of $80 to as low as $17. Nordstrom actually fell as low as about less than $15 this year. bottom here, bottom here. We think a bottom here at about 15 is good. The drop from 25 to 15, if Nordstrom goes back to about 15 tonight, place a bet. This is like a black swan bet. Bet that the reopening of the stores and the healthy balance sheet would allow you to sell even at 20 to 25. Take a look on your risk reward ratio. Make that Nassim Taleb bet. Nordstrom, of course, the e-commerce is there, shop.nordstrom.com. The thing about the clearance sale is that it's 99% down from the stock price. I'm not saying that it will go to about $80, not. But at 15, you can probably sell at 20, 25. Maybe you could even sell at $30. So risk reward is on your side. It's all about risk reward. Girls would continue to shop e-commerce, curbside pickups. Of course, 2019, people are talking about the 10 keys to Nordstrom's digital transformation. They've got their e-commerce sales going for them. If Chipotle can sell burritos e-commerce, why can't Nordstrom sell? Of course they can. Nordstrom has adapted to the e-commerce challenge. Of course, there are other companies, the department stores. Who's going to go to the shopping mall? It's extinct. Everyone goes to Amazon, blah, blah, blah. Okay, Macy's went from about $75 to as low as $5. So right now, this $5 was double bottom, triple bottom, quadruple bottom, boom, 5 to 11. Macy's got a $4.5 billion equity financing. It is nowhere in the brink of bankruptcy. $4.5 billion equity financing. This dropped from about 11 to about 676. Even if tonight it goes to 6, make a bet that it goes about 10, 12 next few months. Coronavirus notwithstanding, take a look. If it goes even to 5, okay, 1, 2, 3, 4, 5, sure, buy again $5. A bad earnings report for Nordstrom is good enough to lift the stock. Now, remember, when a stock is down to the ground, there's nothing left to lose. Nordstrom is trading higher late Thursday, May 28th, following department store's fiscal earnings. Nordstrom said it lost $2.33 a share on revenue of $2 billion. Analysts were looking for just $1 loss in revenue of 2.27. Why do you think that it rallied? Because the market was very, very bearish on Nordstrom. The fact that they only lost $2, the sales only fell 36%, not 90%, was good enough to lift the stock. Macy's, of course, approximately $4.5 billion in financing. June 8th, they got 8% notes. So that tells you that they have no bankruptcy problems. They have funding operations. They've been resolving their accrued payable obligation. They're saying that they have strong demand from investors in this note issuance. So the high quality of their real estate portfolio also positions them well to execute this offering. The continued commitment from the banks allowed us to more than double the size of our existing revolving credit facility. The notes offering of about $4.5 billion of borrowings and commitments is a good thing for Macy's to handle the tide. Capri Holdings, May 28th, has opened over 50% of its global stores. Capri Holdings only opened 15% in America. Of course, these are companies that are have Michael Kors, Versace, Jimmy Choo brands. Jimmy Choo is growing 100% in Asia. Versace is doing well. Michael Kors isn't, but from a triple brand company, the luxury company is now trading just about 3 times multiple ratio. So it's about 90% down from its peak. So you might want to check it out. I think, no, sorry, not 90%, about 80% down. All of the Capri's 288 stores in China have opened the doors to the public. These Chinese guys, Chinese girls love Jimmy Choo shoes. So in other Asian countries, 7% of outlets are open, making this area where Capri sales are currently most active. Segment includes Europe, Middle East, Africa in second place. 60% of locations reopened. Yeah. The way to bet on these department stores is to bet on women shopping. Of course, a certain point of their consumer discretionary would fall. It is right to assume that long-term consumer discretionary would fall because of job losses and the COVID pandemic. But if it's priced to destruction, you might have to rethink. The price of destruction was about $7. This was 90% down. It even briefly fell near 5. Now it's about 22, so that's times 4. We would see that any drops here at about 13 is a buying opportunity. 13, 12, 11. The lower it goes, the higher your risk reward ratio, with the bulls on the favorable as it goes down. Capri Holdings is down 93% from 100 down to about $5 here. 93% down. Looks like there are a lot of people betting on a reopening, rooting for humanity. Non-essentials, who cares about Funko and medical aesthetics, right? Who's gonna have their boob jobs in a COVID world? Funko, okay, boob jobs is Shentra, medical aesthetics. Funko, profit warning, causes 50% drop. It's now trading. It went as low as $3.50. For those who are technicians, they know that this is a bottoming out process. $3 to 4.50. This was a breakout. You buy the breakout here, you buy it, and then a $5 breakout here. A drop to this breakout point of $5 and 4.50 is good, as Funko partnered with Marvel Studios to make a game board, and they basically all of your Marvel toys, your Disney toys, your Netflix toys, even like anything, not just toys but also like apparel, as long as you have like that comic geek in you, as they said, everyone is a fan. So everyone is a fan of something, so whether it be Simpsons or yeah, whatever you want, they have it. So like they have 1,000 licenses, and I think they're coming up with a Funko movie this year, so you can see like mashups and stuff. It's just less than their revenues in a year is about $400 million, and the stock is trading less than like 30% of sales. So I think you can get this at $100 million today market cap. So it's a good like small risk, high reward. Take a bet at about $5 or $4.50, maybe our target about 10. 8 to 10. So Shentra, we were seeing that this was a move. We were betting here at about 180 to 220, 240. From about $1, it's already up 500%, 1 to 5. These are my rooting for humanity picks. As I saw that Shentra Medical Aesthetics has been, they have they're not gonna go bankrupt. They got this move from 1 to 2 was actually somebody gave them a lifeline of about $100 million or something. And then this was the perfect entry point. So we got it at about 180. A lot of us actually sold near 3, thinking the 3 was good enough. Some of us got us sold at 4. It even went to 5. This is a risk reward trade. If it goes back 3 to 250, I would love to re-enter Sientra, as I think that their products of silicone gel plants is the best for the surgeon. So checking like surgeons, they're using Shentra plants, Shentra breast implants, as well as their mirror dry sweat arms. No sweat arms. Casino picks. Okay, software infrastructure play. My game here is Scientific Games. Scientific Games went down 90% in a month, from $30 to $4. It rallied 500% up to 22. Fell down to 13. I would love to buy here at about 11.50. It's a huge drop, but if it doesn't drop to 11.50, I'm actually willing to buy even at 13.85. Buy tonight, buy again here, even if it goes 8.50. The way to do it is ladder into your position. Scale in, scale in, scale in, scale out, scale out, scale out. That's really how to play the game. Why do I like Scientific Games? Scientific Games is a software play, software as a service. It's kind of like a software as a service, providing gambling products and services to lottery and gambling organizations across the world. Publicly traded company is headquartered in Las Vegas. They sell slot machines, table games, iGaming, iLottery products, instant lottery games, lottery gaming systems, server-based interactive gambling terminal, social gaming, sports betting. They started in 1974 with the very first instant lottery ticket. And of course, they have employed 8,600 people, with subsidiaries including Bally Technologies, WMS Industries, as well as the UK sports betting platform OpenBet. Of course, FanDuel, just as a theme on the DraftKings move from going about $26 billion at its peak, FanDuel picked Scientific Games to supply their sports betting technology. Scientific Games has more partners as well. It's just trading at less than $3 billion market cap. I think it's just $1 billion market cap. Scientific Games unveils new suites of sports betting technology. They partnered with Caesars Casinos, Harrah's, racetracks, la la la. They have this open sports, which is I'm bullish on sports betting in the next 5 to 10 years. I love to buy these like bet small and then win big type of trades. So these are like black event type of trades for me. Black swan trades usually have 10% risk or even 30% risk, but like 100% reward, 300% reward. Those are the types of trades that I love to make. Scientific Games launched open sports. You can read about it. Sports betting. So open bet, open platform, open trade, open engage. They've got the player, so it's for the player. They've got a lot of games there. They worked with GVC Holdings as well. So that's with MGM. These are some of the games they have. So slot machines, dice games. If you've been watching like how Zynga is making money right now, it's a lot of mobile gaming. So I think mobile betting, mobile sports betting is the future. So it's good to see that Scientific Games is helping a lot of land-based casinos adopt the future. So our history of innovation, it has more than 80 years delivering what customers and players value most. Scientific Games client is basically your casinos. Not so they're not. It's a B2B type of business. So similar to GAN Limited. So GAN Limited, I also like that company GAN. So yeah, it's similar. So infrastructure play. Scientific Games 2013, 2014, they were the first lottery sports betting system. 2014, they launched cross jurisdiction study for lottery and gaming. They acquired Value Technologies. So take a look. 2016, credit cards, slot machines. 2017, working with like 007 franchise. 2018, 2019. So it's a good company. They also said that they have liquidity position and very strong. They have 480 after adding $480 million in debt. So most of the debt right now is very cheap. Even like Starbucks made a loan of about $20 billion. So they were all getting some money from those $6 trillion stimulus bill. So SciPlay has cash on hand around $130 million, no outstanding debt, $150 million available under its revolving credit facility. They reduced their monthly cost by around $100 million via a combination of capex, workforce pay reductions, as well as furloughs from a prior range of between 300 to 330 million. So reducing costs enables the company to be an even stronger competitor as the industry begins to recover. They also volunteered a 100% reduction in pay as the CEO and the rest of the executive takes 50% pay cuts. So the diversity to serve our customers across the industry around the world gives us a unique strength in these challenging times. You want to take a position on this. Now, casinos, we said that we like Michael Burry. Michael Burry actually took famous stakes here. In May 22, they reported that Michael Burry, the Big Short, doesn't short just mortgage stuff. In 2008, of course, he was mortgaging. He was shorting all these CMBS. He recently added stakes in Las Vegas Sands, Wynn Resorts. Most of these firms' positions are actually rooting for humanity in name. It's all about like casinos, retail, restaurants, la la la. So long-term ideas, structural winner series. I want you to believe in these big trends. I think that the 10x opportunities, the 100 baggers will reside on e-commerce, streaming platforms, the new entertainment. So when we talk about e-commerce, we're talking about Amazon, Alibaba, Pinduoduo, JD, SE, Meli, Ocado. There's about 10. Etsy, Shopify. Yeah, but you can't buy the e-commerce cheap. So I'm sorry for people who wants like 30% drop. 30% drop is all you can get for e-commerce. Streaming platforms are also a good opportunity for you to enter. So of course, Netflix, Roku, believe in the trend. If you want to check on Ruby, connected TV, RUBI, that would be connected TV spending is rising at the moment. Of course, it bottomed out in about May. So you want to enter those themes. Esports industry, you could play this through a several ways. You could bet on the mobile sports betting. Also, esports industry, you could enter like Flutter, FLTR. You can also FLTR. This is the owner of the major owner of Poker Stars, also the owner of FanDuel, Paddy Power. It's trading in London Stock Exchange, ticker FLTR. There's so many ways to cover for esports industry. You could of course trade through the platforms such as the Huya Douyu, which is gonna merge right now from Tencent. Of course, yeah, like I'll read the trends. But yeah, I mean, if you want questions per sector, we can go through it. So mobile payments, I think you've got a lot of 100x moves here. So when you can buy things like Square, StoneCo, we made a bet on StoneCo at about $25. If it goes down back to 25 or $30, of course, it's a no-brainer buy. Social media, new forms of digital advertising. Of course, social media, we're talking about Facebook, but maybe TikTok will get listed next year. We'll see. If it's listing at about $75 billion market cap, you might want to enter those themes. New forms of digital advertising, of course, that's connected TV. So that's your The Trade Desk, that's your Ruby. The trade desk rallied from about 140 to 360. I don't think you can get it anywhere low now, but at $300 below, you might want to enter if it even gives you an entry. Enterprise software, that would be for your so enterprise software, that would be your Slack. Slack is a good bet now. $30 remote work collaboration. There's a lot of themes on enterprise software. We can go. You of course know Zoom video. So I mean, a drop of $150. That's a godsend if it even goes there. Enterprise software, Microsoft, Amazon, those types of things, cloud computing. 5G, of course, 5G. You've got a lot of names to uncover in 5G. I like Insigo, INSG. Mobile Wi-Fi hotspots for a lot of countries, like more than 40 providers. I like in 5G a play on Lattice Semiconductor. D2C, I like Nike there. Food delivery, Grubhub just partnered with Takeaway. It's too expensive right now. I wouldn't want to enter now, but I'll wait. Ride hailing. Personally, I am not a big fan of ride hailing, but yeah, I mean, some people like that. Millennials and Generation Z. There's a lot of ways to play millennials. You could think about what millennials are up to right now. So millennials of China are in Bilibili. Generation Z, yeah, so they like about you could play like the games like through Fortnite, you could play it through Tencent. Also in the gaming sphere, or Nintendo, Animal Crossing, screenagers and Instagrammies, of course, you go for like Facebook there. Robotics, AI, automation. The theme there, you'd have to play Baidu and NVIDIA there. Online merge offline education. There's a lot of themes there. I like CoLearn. 1797, that would be in HK. I also like NetEase, Youtao. NetEase Play is Youtao, so I like that company in China, DAO. Work from home collaboration a lot. You can talk about Slack, Zoom, Microsoft. You can talk about even the cybersecurity, right? So when you're working from home, you need to like ensure that, like, so there's like Okta, there's like Zscaler. Alternative meat is a lot. So people know me on meat, but there's Kellogg's, Conagra Foods, Tyson Foods. When we're talking about international expansion, also a lot. We can talk about like Shack. We can talk about Starbucks. Yeah, you can even talk about like international expansion of big brands like mm, even Netflix. That's an international expansion play, right? So they're expanding in internationally in Southeast Asia. The way that Sea Limited is also an international expansion play. So seven Southeast Asian nations. Globalization, Starbucks, athleisure and vanity. That's Nike and Puma for me. Vanity, it's Estee Lauder for me. Self-driving cars, I'll go for Baidu. Although people would say it's Tesla, I'd also go for NVIDIA's play on self-driving cars. Clean renewable energy, that would be Enphase for me, ENPH. I also play Albemarle there. I think lithium-ion batteries, that's a good play for the cleaner renewable energy. Crazy Rich Asians, China, India, Southeast Asia, you can play it through e-commerce. So Crazy Rich Asians, the richer they are, the better for luxury brands. So I'd say that some people like LVMH, but I'd say I'll go for the cheaper pick, which is Capri Holdings. So yeah, let's see. There's a lot of names. It's 6:35. Let me see if there are questions. Can I see any questions? Are there questions? Let's close. Okay, there's no questions. I'm happy that you heard all of the things, and I hope you learned a lot. See you again in our next sessions every week, every Friday. Please listen to watch our YouTube channel, our Awesome 10X. Thank you. Bye-bye.